Welcome to episode 15 of Galan Lithium Limited. My name is JP Vargas and I'm with Galan CFO, Ross and Dinsdale. How are you?
I'm doing well, thanks, JP. It's great to be here and to share with our listeners really a recap of the quarter just gone, June 26. JP, I'll start by asking you the question. Obviously, we're ramping up now into production. How's the plant been performing? How have we been tracking overall with that ramp-up period?
Well, it's been a good first half of the year. And the last quarter, we came into production. We announced that the nanofiltration plant is doing what it's meant to be doing, meaning separation of impurities, and start building a pond number 4, with clean brine that will eventually be evaporated to 6% lithium content, and that will be our first sales coming up into the next quarter. So tick, tick, tick. We enter into a tricky part of the year, though, in terms of production. It has been a tough winter, very cold and windy, a bit of snow, but nothing that has moved the post in terms of our production time for coming online in terms of our first sales, which is the next quarter into this year.
And JP, it's probably a good point you draw on there. There is a seasonality profile to our production, which is common amongst brine operations that reliant on evaporation. Can you just describe to listeners what that profile looks like over the course of the year?
Yeah, it is a natural seasonal effect. We have obviously less evaporation in winter compared to summer. I will say that the ratio is around 8 times more evaporation per day in summer, at the peak of the summer, compared to winter. And yes, we started a slower piece under challenging conditions, but the good thing is that we were prepared for the winter and we were able to manage what the weather has thrown to us. It was a big one that I haven't experienced before, but despite that, the plant is fully operational, is doing what it's meant to be doing. We are adjusting and optimizing the plant. As we see in results, we have our own lab. So we've been tweaking a few things within our profile to get to where we want to go. So the vector has been one direction. It's been going forward. It's been increasing. We are adjusting the plant. We are trialing and error a few things, but it's all part of the optimization process that we commenced last quarter. And by the time we come into summer, we believe that we'll be in a very good position to increase from 4,000 tons to 5,200 tons, which is the expansion that we did the cap raise early on this year.
Yep.
And also that will marry it with what we have already, which is 10,000 tons of lithium carbonate content in our ponds in system 1, 2, and 3. So we are trying to line up the ducks in terms of inventory, processing, production, timing, coming to the fast part of the year. And, the best part for you is that we're going to get the invoices with the product coming up later on this year.
Yeah, that's right. And it's probably a good segue then to review our financial position and talk about what's ahead from a financial perspective. And look, there is no interest-bearing obligations, no debt on balance sheet, which is a good position to be in. We finished the quarter with a bit over 35 million Australian dollars, which is great. And we have a short window now to when we start producing and start generating first cash flows. So we're very much funded into our first phase of production. What lies ahead is really expansion phases. Now, with the benefit of having production and cash flow generation, there is some choices to be made around when you pursue growth. We've, of course, demonstrated to market in a definitive feasibility study in 2023 what that could look like, which is the phase 2 of our operations. What we will do, and we have discussed this in podcasts in recent history about updating that study. We very much intend to do that. However, we do need to make the most of the results and the operational data that we're witnessing right now. So plant performance in particular is something that a competent person will need to see and sign off on after a period. Once we have the benefit of that data, we can roll that into a feasibility study, which can then be shared with the market, and that will be the basis for setting clear expectations on how much product we've got to sell, what the amount of capex that we're seeking. Now, we'll say this: we have funded equity. Equity has been the principal source or the only source of funding to date, and we'll have a cash flow generative asset. So we expect with phase 2 looking ahead, that's going to be largely debt funded. So we'll run that process, and it's probably hard to put timeframes, specific timeframes on things, but it's probably the direction we can give the listeners is that the work is going to be done towards the tail end of this year in terms of getting all the study and the preparation work done, and we'll launch that competitive project finance process off as soon as we can thereafter. So it's kind of probably pushing into the start of next year.
Yeah, and as a reminder for our audience, phase 2 is fully permitted. We have the permit to go to 21,000 tonnes from 5,200. We have a RIGI as well, which is we were the second RIGI in Argentina in the mining sector to get that approval, it's just funding, but we want to get the right funding and a competitive process to get that. Just a brief one, just to refresh our audience about the RIGI. Why is it so important for us?
Well, JP, you mentioned a couple of key benefits there. So there's a host of tax benefits there. Beyond that, there's 30 years of fiscal stability. So what that means is that the government can't change the rules. Governments change from time to time, as people are aware. They can't change the rules in terms of the fiscal regime we operate under. So we have that certainty for 30 years. That is further protected by a bilateral investment treaty between Australia and Argentina, which means we're a protected investor in Argentina. We get other benefits like 2 years of accelerated depreciation, and importantly, it provides the mechanism by which we can repatriate dollars from the project in Argentina, repay any debt facilities that we need to repay in the future, and repay our shareholders through dividends or something similar. So that is the importance of the regime. It's not given out freely. It's very much a process that you have to go through to present your credentials and evidence how you're going to spend at a minimum $200 million over 5 years. So we've gone through that process, and we were amongst the first to get that award, and now we're spending to that regime. So it's enormously beneficial, JP, from where we were to where we're sitting today.
Yeah, and all of this is coming out, in my view, and I'm not sure your view, probably similar, at the right moment when the market is expected to come back. The current prices, everybody's spooked by the price, but with a covenant price close to $21,000 a tonne, compared to where we were a year ago. You see that equities have fallen significantly, but the lithium price has not had the same effect. So seasonally, we see that the second half of the year is more active, and there is more demand of lithium in the northern hemisphere, where all of the action is happening. And we're seeing that seasonally we'll see a decrease, potentially a decrease of inventory, and the price could go up again to what it was earlier on this year. The price remains very strong, by the way, in terms of what it is. The margins for us are very, very strong. So what I'm trying to paint is a picture that we have all these benefits that we can access from the government, and us doing our bit in terms of investment. But the market is aligning at the right time for us to come online and have a decent margins as well to keep going and grow Galan into the next phase.
Yeah, I'd agree with that, JP. We have had recent discussions with investors of different scales, asking us why there is this disconnect between the market, the lithium market, and the equities. And in Australia, there's the catch-all phrase "risk is off," and that's doesn't explain it precisely why we're seeing valuations come off in equities. But for some, that presents a buying opportunity. We released a presentation this week where we did some analysis against our peers. I think most listeners would be well aware of the status in terms of the mineral resource size. Most listeners would be well aware of our positioning on the cost curve. We're right down the bottom end, and there's some nice illustrations people can refer to in the presentation. But perhaps the new piece of information is enterprise value per resource tonne. Where do we measure up compared to our ASX peers? And the message is we're right down the bottom, which means that we're compelling value. So many of our production peers, there's a very small number, you can count them on one hand on the ASX, they're trading anywhere from 12 to 17 times more on a resource tonne than what we are. So that presents a fantastic opportunity, I think, for some investors to look at the space, look at Galan. We think we're distinguished amongst our peers. It's a business with 40 years of reserves and resiliency by virtue of being at the bottom end of the cost curve. So it's there is this disconnect, and maybe that's opportunity rather than something which should be viewed as being negative.
Absolutely, and our catalysts are coming up within this year. In terms of confirming production, confirming sales. So yes, there is a period of time that the market is looking at us. Can we do it? Can we make it? But this is the opportunity that also presents to fly under the radar for anyone to come, and then it's a very clear path as where we're going to go once we get into cash flow and the type of valuation that we're going to be commanding down the track. Because of that, I think is significant. You know, today process, we could be seeing multiples. Galan could be and I believe there's going to be a very different company, and in base of the strength and production profile where we're going to go in 12 months. So what's not to like about what we've been doing very hardly in the last few years. By the way, to your viewers, that presentation, invite them to download that presentation. It's very illustrative as what it has, and it has the points that Ross has said. So with that, I think that we concluding our quarterly. From your end, is anything else I'd like to add?
I think that's it, JP. That's a wrap.
Okay, well, thank you very much once again. Until next time. Thank you.